Where are IT stocks going? On Wednesday, the Indian stock markets hit their highest levels in 2025, as we just told you, thanks to a rally in information technology stocks after HCL Tech's strong forecast and hopes of course, the de-escalation in the US-China trade war, which could mean that the economy would be stronger in the US, which could mean that companies will spend more on IT that could benefit Indian IT companies. So that's the thought process. HCL Tech jumped about 7.5%, the most on the Nifty 50, as it provided full-year revenue forecast, which outpaced analyst expectations and the outlook from its peers, Reuters reported. Also adding that the IT index jumped about 4.3%. That was the best day in 9 months, thanks to all of those forecasts, which have been, of course, weighing on prospects for IT companies. So, IT stocks are looking up once again, at least for now, after being shunned somewhat in recent months and, of course, even years. Is this temporary or not? And what is the longer term view on IT companies? And what is the growth potential, at least as viewed by analysts who are tracking this sector closely? I reached out to Rahul Jain, Director of Research at Mumbai-based Dolat Capital Market, an IT sector analyst, and I began by asking him how he was reading the latest clutch of results by the top IT companies and what were the questions that he still had for them or which he was waiting for answers.
As you said, there is a mixed thought process because given the macro changes that were taking shape, the stocks took a beating first. And so that in turn kind of toned down the expectation that one were perceiving in this earning. So the mindset itself was accepting a much lower growth than what one was thinking, let's say just 4, 5 months back. And to that number, of course, numbers are either slight miss or in line. But of course, what we were thinking few months ago, they are much lower there.
If you were to now look at some of the big companies, whether it's TCS, HCL, Wipro, and others which will come, what are you seeing within those numbers and between the way those results are emerging?
Yeah, I think one thing is sure that the commentary is more conservative than the impact, at least at this point, because of the lot of noise which hampers the sentiment first and business probably at a later point. I am rather hopeful given the guidance that has come up that either they will achieve this guidance or they may potentially surpass this number. So the good thing is that expectation has been set lower, which makes you feel like things could turn better from here. And it's like third year when, IT has not done so well. So, expecting a modest growth would not be such a difficult task. Of course, this assuming there's no major dramatic impact that we might see on macro front after a 90-day pause. If that, go back in the circle, then of course the view will take a hit.
Right. And how are you seeing the changes that are taking place within companies because of AI and basically technology and the way it's maybe changing the structure of workforce, the structure of response, or the nature of response?
Historically, we have seen that these companies are not the first in terms of getting into the newer trend. But at this point, it's more about how many resources they have and stuff like that. But at a later point, we would see those investment in the training culminating into revenue growth. But very difficult to highlight that company A is doing better than company B. But the usual champion are similar in the tier one pack, which is HCL and PTCS, while Techem and Wipro continues to remain weaker on a relative basis.
What are the two or three main questions that you are asking managements, Rahul, when you talk to them right now?
Yeah, I think one question which remain unanswered for me for last couple of quarters, and this I try to ask everyone is that, why for the last 2 years Indian IT services is growing slower than global IT spend. There's no great answer I've received so far. So that is one question I would continue to chase. Even if you look at the current year, IT services forecast for Gartner is upwards of 7%, while the guidance that we are seeing that it looks like we will do 3% or 4% for this year. So it's a very difficult to understand kind of a question that something that has not happened in last 20 years was happening for the last 2 years and looks like could be this year as well. So this is one question which I want to answer.
If you look at stock prices now in the current flavor, maybe it's just this week or so on, but there is shift towards, let's say, financials, consumer staples, because these are all seen as more protected in a tariff war. How do you feel IT stocks will fare or could fare, and where would people slot them in terms of riskiness in coming days or weeks?
I think at least this part is very well captured in the current valuation because for a very low growth, the large cap is now trading 20 to 22 times. I think this is where it should get bottomed out. What we might have to wait for is the trigger for an upside. So the downside is, as I could say, or the risk is what I would say is behind us. The upside trigger is something which could happen in 3 months, 6 months, maybe a year later. That all depends upon how the macro shapes up. But yeah, valuation definitely are in the bottom zone, I would say. I mean, we reach 4-5% dividend yields, so I think that's a good benchmark to look at whenever the things has to bottom bar.
Last question. So we've talked about the big companies. How are you seeing the second rung or second tier companies, which are smaller and maybe growing faster?
Yeah, they have shown a much better resilience, and their growth have been more skewed to fewer clients given their size. And of course, that's a double-edged sword. I think so far the mid cap have continued to perform better on a 5 year basis versus the large cap. I don't see that to be any different. But as we enter into the next 5 year phase, and when some of the newer technology will take bigger piece of the incremental revenue, I think that will become a difficult period for some of the smaller names. But as far as the mid caps are concerned, I think they should continue to do well. Small cap might need to be realigned at some point.
Rahul, thank you so much for joining me.
Thank you for having